Hello, traders. It is Tuesday, April 28th, and we are about 4 hours into trading right now. Market's been all over the board. We had a nice big rally to a new relative high, and we saw this little bit of a compression right up in here. Right out of the gate, we had some tails above body, and here was the tell for me that we were going lower. I saw a compression. I saw my 1OP indicator rallying while we were in this compression. That is a bearish divergence, and then boom, we got that one long red candle. I told everyone in the chat room that was a big warning sign right now. We're going to see more selling. We easily took out the high from the prior day. You can see the selling that climaxed in here. Now on this way down, didn't do anything. In fact, I got stuck in a trade, STNG, early in the day. Took a bit of a hit on that one. That's one of the oil tankers, and the bottom kind of fell out of that. So I took my losses, and then I had to regroup. Once we had this nice big sell-off, I saw this 1OP cross. This is my indicator that I use for trading the S&P 500. I could see that we had gotten above the open of this long red bar right here. So I got long in here. Believe I made about 5 S&P points on that move. Then we had this upward sloping trend line right here. We had a bearish cross on the 1OP indicator. I got short there. I made about 9 points on that move. Then we had another nice little opportunity right in here where we had this downward sloping M5 line. I bought the futures in here, made money on that. So done really well trading futures today, and these have been decent moves. They don't look like much on a daily chart, but these have been good moves. I'm probably up somewhere around 18 S&P points right now. So decent day there. I've also had some nice stock picks, but right now, here's what I see unfolding for the rest of the day, which incidentally, if you watched my video yesterday, I'd mentioned to you that out of the gate we had kind of a choppy, stally kind of trade, lots of compressions, lots of tails, and then we had this nice move higher. But we didn't join that either because it wasn't defined whether we would move higher or not. There was really no clue on market direction. So we missed that move. And when I did the recording, I said, here's how I'm going to play this. I'm looking for resistance here because that had also been a major resistance level on a longer term basis. If I go out to a 30-minute chart, you can see we're bumping up right against the prior high, and we weren't able to get through that price point right there. So what I mentioned in my video was I said, I think we're going to test it, but we don't have enough strength to get through it. We're going to have a pullback in the afternoon. On that pullback, that's when I'm going to be looking to get long. I missed this earlier move, but that's okay. And I expect us to close on the high, and I expect us to get through the 288 level. Please go back and check my video from April 27th. Take a look at what time it was posted and recorded. We got that late day rally, so we did really well yesterday, late in the afternoon. That 288 level didn't hold, and you can see how the market gapped higher, and it did not hold again today. So we've had a lot of selling pressure off of a relative high. We'll go into that daily chart, and you can see we poked through that resistance level and we're forming a red candle. Now, what's going to happen the rest of the day? A little bit difficult to say. We've got a double bottom low here, 1, 2. We've got a nice bounce off of that low, but we're compressing right in here and we're not able to work our way through that high. My suspicion is that this is going to be a bearish trend day. How can that be, Pete? Google's going to be reporting earnings tonight. We've got all the major tech stocks on deck: Apple, Amazon, Facebook, Twitter, Tesla, you name it. They're probably going to be reporting. So, yes, this is going to be a bullish stretch because nobody likes to fade the market when you've got mega cap tech stocks reporting. These have been the really fueling the market rally for the last few years, and they represent about 20% of the S&P 500, so they're very, very important. These reactions are going to be critical to market direction. I think we're at a resistance level right now. I'm looking for the market to pull back. I'm not placing any big bets on a short right now. I want to make sure that I've got at least some signs of a technical breakdown, and I want to get through these mega cap tech earnings. Then I can get more bearish. And I feel that others are feeling the same way too. Nobody's going to aggressively short this market ahead of major earnings announcements like this. I do want to mention that these earnings really are not incorporating the whole coronavirus picture. About the last month of this quarter was impacted by coronavirus, but I think we're really going to see this in Q2. So the results have been coming out and they're pretty good, and everybody's going, oh, that wasn't too bad. It's kind of the same way with the data that we've been getting over the course of the last month. It's all backwards looking. The agencies that collect the data, for the most part, have been closed or they're working remotely. It's been very hard for them to get those numbers. I believe they're pretty grossly understated. So right now there's a lot of euphoria in the marketplace. Everybody's looking forward to reopening the economies. They're looking forward to the coronavirus starting to decrease and the curve being flattened. And that's priced into the market right now. But what I do not feel is priced in is how difficult it's going to be to get the economy kickstarted again. People have been without income for the last 3-4 weeks. They've had to really scrape to get by. I don't think they're going to be opening up their wallets right away. They want to try and save as much cash as they possibly can. Those who go back to work and the companies that have gotten that PPP loan from the government, if you're at work and you're not producing a lot, or you don't see a lot of foot traffic coming into your stores and you don't see a lot of new orders coming in, you're going to be very cautious with your money, wondering when that PPP loan runs out, am I going to have a job? So I think that consumption is going to remain very low through the summer. And you're seeing stocks like GM start to bounce on news that they're going to be reopening the plants. Well, just because they reopen the plants doesn't mean that people are going to be buying cars. And here you can see how GM gapped higher right out of the gate today. We're seeing a lot of retailers start to move higher. And I'm really questioning those moves as well. ROST is an example of a stock that really gapped higher today. You can see it almost got up to the major moving averages, and now it's backing off. So there's a lot of optimism built into the market right now, and I feel that we're going to get a splash of cold water when we do try and start the economy back up. I hope that I'm wrong. And I'm not going to be out here willy nilly just shorting this market because I suspect this or I suspect that. No, I'm going to be waiting for a technical breakdown. You can see that we've got a technical support line right here. I can click GTC. I can click on that candle right there. I can click on that candle right there. I can draw an upward sloping trend line. When that trend line is breached, I will know about it because it's set on a GTC basis, and that would be one warning sign. A failed breakout at the 288 level with the market closing below that 288 would also give me additional confirmation. If by chance we see late day selling today and the market closes on its low, we could have a bearish engulfing candle right here. That would also be bearish. If Google comes out and says that their ad revenues were way down, with lots of ads being canceled during coronavirus, we could see another leg down tomorrow. Okay, well then I've got an upward sloping trend line that's been breached, and I've got this breakout that's failed. I've at least got a few things that I can hang my hat on and try and start shorting the market from that point forward. So that's how I see longer term things playing out. As for today, that was a pretty dang nasty reversal that we have had. You can see the long red candles here. That is a bona fide sign of selling. Now, this first bounce took a little while to unfold, and that told me that we're probably not going to go much lower until we had another bounce. And now I'm drawing this upward sloping trend line. So, how do you play the afternoon, Pete? Well, I click that candle there, and I click the bottom of that candle there. I draw my upward sloping trend line. I wait for my 10P indicator to spike and cross over bearishly. I wait for this uptrend line to be violated. Then I know I've got an opportunity to short. I've got a watch to cover right here on the low of the day, and that is the low from yesterday. So that would also be an area where I would want to take profits, feeling that that support would hold. Now, if we finish anywhere close to that, we're going to get that long, red, bearish engulfing pattern that I had mentioned. Yet on top of that, any kind of weakness from Google after the close today, and I think the table will be set for a little bit of a pullback. Tomorrow we've got the FOMC meeting. I can't imagine that they are going to be anything but dovish. So that should be good news for the market tomorrow. Plus, we need to see how the other big earnings come out. We don't have to wait long for them. We don't have to wait weeks. It's just a matter of days. So everybody right now is kind of sitting on their hands, waiting to see how these companies report earnings. They're hoping for some guidance. The guidance has been almost non existent. Companies have no idea of what to expect right now, and they're pulling their guidance. So the clarity that we had hoped for out of earnings season just isn't there right now. Asset managers are going to be relatively passive because of that as well. We've got corporations hoarding cash right now. They're cutting their dividend payments. They're also stopping their share buyback programs, which incidentally, we've had about 10 years worth of really aggressive share buybacks by corporations. They've been issuing very cheap debt and using the proceeds to buy back their shares. About half of the outstanding shares have been retired. Fewer shares, same demand, higher price, higher stock market. Well, that bid is going to be removed from the market as corporations no longer buy back their shares. They're trying to preserve cash. They realize that there's a storm coming and that they need to stay as liquid as possible. So I think all of those factors tell me that we're getting pretty close to a top. I'm not going to guess where it is. I'm going to wait for it to show itself. And we are right at the halfway point between the February high and the March low. So right in here, we've had a 50% retracement from the high and the low. I think we spend a little bit of time here and we wait for some clarity and we see how the market recovery goes, how the economic recovery goes. But I am getting more and more bearish with each passing day, especially as I see the dogs. There's a quote that they use on the street. It's called "the dogs are barking." That means that even the laggards are starting to catch a bid and they're moving higher. When I see that, I also feel that we're near the latter stages of a market rally. And if I go through all of the gainers today, I'm seeing some really weak stocks, retailers, energy stocks, automotive stocks, travel and leisure stocks. They're all starting to move higher. And we haven't even opened the economy back up. We can put up Disney, might be a good example, and we'll see what that's doing. And here you can see Disney's actually been moving higher. Got this cup and handle formation. Well, that looks great, but it's moving higher, but they haven't even opened their theme parks yet. DE was another one. You can see how the stock has been moving higher in recent days. I think these are good shorts. I don't see that they're going to be going gangbusters. Caterpillar, another one. The home sector is going to be hard hit. You don't have any heavy equipment being sold to the tar sands because of oil prices. You've got the housing starts are going to be very, very slow while people conserve cash. So, yes, I'm painting you a fairly bearish picture because a market drop that we saw like this with that type of speed, I think that we have some aftershocks, and that's what I'm going to be waiting for. I'm going to be looking for some shorting opportunities, some opportunities to sell some out of the money, bearish call spreads. So that's how things are lining up right now. And I'm going to take a look and see if I can find a bearish trade for you, a bearish call spread. We're going to be looking for some weakness, and I'm going to go into my custom search engine. So I'm going to bring that up, and then we'll be able to take a look at some searches. So in the custom search engine, I'm going to be looking for earnings date projected. Now this is something that I showed you how to use in my video last night. I want to have at least a couple of expirations that I can sell some premium against. So there's a May 1st Friday expiration, May 8th Friday expiration. So the earliest that I would want a company to announce would be on the 11th of May. That means I can sell that expiration, and these options would expire. That's the goal. So I also want to find a stock that's got some decent option liquidity. So I've marked that, got a rating of 3. And on a day when the market made a new relative high, I would like to see a stock with some momentum to the downside. So I'm going to click ADX bearish. I'm going to mark that on a 30-minute basis. That means that the stock has been fairly weak over the course of the last couple of days. We'll click scan. 2 candidates. Cool. See what we got. Alibaba is one of them. You can see, nice spike up, starts to hit a peak. All of a sudden, we're back below the 100-day moving average. Cannot get above that 100-day moving average. This would be a good bearish call spread to sell, keying off of that 208 level. Hover over the E, see when that next earnings date is, 5/20. Got plenty of time. So let's take a look and see what we might have lined up for that. Now, that could be impacted. Alibaba is like the Amazon of China, so it could be impacted a little bit by Amazon's number, but let's take a look and see what we've got for options on that. And we're bringing up the Alibaba. We want to go out to at least the May 8th expiration cycle. I like to stay within 2 weeks because then I get maximum time decay out of these positions. And we'll scroll down to see what we might have available at the 208 strike price. Well, we've got the 207.50s, which is below that 100, actually it's right above the 100-day moving average. That would be acceptable, but maybe not ideal. This red dotted line represents one standard deviation. The black line corresponds with the 100-day moving average. So we definitely want to be above the 100-day moving average. If possible, be nice to be at least one standard deviation out of the money. I'm going to click on the bid on the 210 call. I'm going to click on the ask for the 212.50 call because there's $2.50 between the strike prices. I want to get a 50-cent credit for this at least, and we can see that that is 36 cents bid offered at 43 cents. So we're not quite to our credit, but we're close. Close enough to maybe do a trade at 40 cents. Yes, I think that would probably be worth considering. Because we have this 100-day moving average that we can lean on, we also would have a stop based on a close above the 100-day moving average. Then we would still be out of the money at that $210 short strike price. So given that this trade expires on May 8th, we've really only got about a week and a half left till expiration, a week and 3 days. So I think that's a really decent trade for you to take a look at. Let's go in and put up the 10SI indicator, and we can also check for relative weakness. And when I overlay that, I'm looking for the orange line to be below 0, which it is on a daily basis. That is a sign of relative weakness. If you want to, you can also use the SPY overlay. I feel that this gets in the way a little bit. You can see the gray line is the SPY, up, 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 stock down, down, down. So we want that type of relative weakness working in our favor. That's how we do it. I did have another stock on the list, Baidu. So let's take a look at that and see what Baidu is doing. Not a whole lot. You can see that Baidu has not been able to rally like Alibaba has. So it is weak by nature. And in this case, you'd probably want to sell a 108 call, and we can bring that spread up. So we're going to load that option chain, and we're going to hover over this E to see when that earnings date is, 5/21. So we've got time. We're going to go into the May 8th to see if we can get any decent premium here. And we're going to check that 108 strike price. Click that. And we're going to click the 109. I don't think we're going to get much in the way of a credit here. Actually, you can see that it is a negative 6 cents. So let's say it's zero bid offered at 26 cents. Now, because we've got $1 between the strike prices, there I'd want to get a 20-cent credit. You can see it's offered at 26 cents. We would need to see a little bit of a bounce in the stock, but then we could get that trade off. That'd be a pretty good one. So if I can get a 20-cent credit for that, selling the 108 calls, buying the 109 calls on BIDU using that May 8th expiration, yeah, sure, I would do that. See how easy this is? It's really not hard. I showed you the search that I used for it. Easy to construct. Just block out the earnings date so that you know you've got at least a couple of expirations that you can sell against. And the rest is pretty easy. Put in the criteria that you'd like to use. That's it. That's how it works. So that's going to be it for today's presentation. We're going to take one more snapshot of what the market's doing, see where the S&P might be headed. So we've got this breakout right now. You can see 287 65 is the number. That's where the market is currently. So it's just below that 288 level. Why is 288 significant? That is the 100-week moving average. I've been pointing at that number for quite a while. So you know that that was my first resistance level, my first target for the S&P 500. I'll put up the SPY and I'll go to that chart very quickly so that you can see. And you can see how we breached above it early this morning, but right now we're just below it. So that's the first technical resistance level. And then these major moving averages come into play around 300. I think that's as high as the market retraces. So if we get some gangbuster, really solid, great news from all the big tech giants, that's about as high as I see the market going. And then I think we'll really have some stiff headwinds to get through. But if the news is a little soft right now and these mega caps don't produce the type of buying that everybody's hoping for, I think we could see this upward sloping trend line fail. And this will be the resistance level that we can key off of, get short, sell some out of the money bearish call spreads, let the market come in, wait to see how the recovery goes. Perhaps we make another higher low, and then that sets up for a midsummer bounce off of that level if the recovery is going well. So still a lot of unknowns, a lot of potential credit issues out there right now. And if credit becomes a problem, look out. That's when you get sustained market declines. I'm seeing some warning signs, but nothing imminent yet. And that can change very, very quickly. So that's it for today. If you like the content, please give it a thumbs up. And oh, I can't stop this yet. I've got to go through and take a look at the 2 trades that I left you with yesterday. I promised I was going to try and do that every day. Lulu was one of them. I like Lululemon, and you can see how the stock is still close to the close from yesterday. You should have been able to make some money if you bought this based on the video yesterday. You're in somewhere in this level and you're doing fine. You're making money. If you'd have bought that on the close, hoping for an overnight, you had an opportunity to make some money, but you'd have to stop out at a break even in here. So Lululemon has held its own given that the market reversed hard. You can see how it's compressing right here. And I can set an alert on that, which I'm going to mark that candle and that candle. If it breaks out, I'm going to get an alert on it. The other stock, and really my favorite yesterday, was FLIR. Look at that baby go. I had the video here. Did great yesterday. It gave back a lot of gains on the close, but man, is this stock starting to run. I am long this stock on a swing basis, so I'm loving it. Probably going to take some profits on it. You can see how it's continuing to move higher, so that was a very nice trade. That's it for today. Thanks so much. Again, please give this video a thumbs up if you like the content. Make sure to subscribe to this YouTube channel and turn on your notifications so that you don't miss another one of these videos. Make sure to watch the earnings video that I posted just before this one because I show you 10 different ways that we're able to nail earnings before the announcement and after the announcement using Option Stalker. Thank you. Have a good day. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.